following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by Options Express. Don't spend time worrying about your broker. At Options Express, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. Options Express lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. Options Express is a member of FINRA, SIPC, and NFA.
Welcome back to the Option Block, and I hope all of our listeners are having a fun and exciting and indeed profitable trading week. There's certainly enough activity going on this week to keep you busy and keep you glued to your screens. My name is Mark Longo, and I will be your host through this penetrating gaze into the world of options. I am joined by the usual cast of characters, starting off with the man holding down the OX chair this session, none other than Mr. Tim Navabi himself from Options Express. Mr. T-Nav, how are things going with you this week?
Things are going very well. Thank you very much for asking. Yeah, definitely a lot of opportunity this week. Today I was busier than a one-armed man in a wallpaper hanging contest. So nothing against one-armed men, but very, very busy, I guess, is kind of what I wanted to say.
You had to labor a little bit for that analogy, but it worked out in the end.
Thank you.
And, of course, we are also joined by the man from the mountains himself, Uncle Mike Tusaw from Know Your Options Inc. Uncle Mike, how are things going with you, sir?
Going well, going well. Every day's a holiday, every meal's a feast.
Oh, good. Spoken like a man who has many collars on in SLV.
Yeah, it's one where I'm getting ready to. I've been trying to roll down this put and buy more shares of it, but I'm not going to do it until it even pretends like it wants to go up. It hasn't done that yet.
Got to give you some signs first.
I guess so. I need to open up the crystal ball or something. It doesn't look. It's down.
And we will be joined momentarily by the sea bass, the old greasy meatball himself, Mark Sebastian from Option Pit. So with that, we will roll right into the trading block.
The Trading Block.
And welcome to the Trading Block. This is indeed where we discuss what has been trading, what's been lighting up our screens today, what's been catching our eye across the markets. And it was an interesting day today. In terms of the broad indices, it was a broad downside day. We saw the S&P down about 12 handles, Dow down about 140, NASDAQ down about 13, and the good old VIX cash up to 1830, up 1.22 points. Well, the bulk of that activity we saw today, the market was relatively unched until we saw the unemployment numbers coming out, and that seemed to really kind of slap the market down to the downside a little bit. We heard renewed worries about the good old health of the economy after the Labor Department put out first claim for unemployment benefits today, and they were up to 474,000. The economists were expecting a 410,000. Good old economists, they don't call it the dismal science for nothing, and so their forecasts were quite a bit off, and the market took a drive or a plunge to the downside as a result. Of course, we also had a string of earnings so far this week. The bulk of them have been relatively lackluster, it seems like, for the most part. We heard numbers coming out of Tesla, Cibo, GM, and it seems like so far this week the premium sellers are winning in the earnings battles. They haven't seen too many Netflix-style 30, 40 handle moves to the downside or upside as a result of big surprises coming out of the earnings guidance. I mean, if you were selling premium on Tesla, if you were selling premium on Cibo, if you're selling premium on GM, you worked out all right for the most part. Tesla is a surprising name. They had priced that straddle, I think, at about $2.50 going into earnings, and it sputtered out about 25 cents, I think, after the earnings. So a name that usually is known for some good after earnings has been both a friend and a bane to premium sellers in the past. Kind of sputtered out this time. Even Cibo, which is the name we've kind of talked about a few times in the past, and I've always said it hasn't really been that friendly to earnings plays. I looked at it. I just brought it up again. They had earnings this morning before the open, so today is their first post-earnings activity day. And take a wild guess how many at-the-money front-month calls traded today in Cibo right after their earnings announcement today.
462.
Mr. T-Knob, what do you say?
Wow. Could you give me a hint?
I'll give you a hint that Uncle Mike is wildly optimistic. I will say that.
I will say 5,000.
Wow. Okay. You want the other end of that spectrum then? No, 17. 17.
Wow.
The stock closed at 26.33. They had earnings this morning. They say it traded 17 May 26 calls. So yeah, not exactly a name that you can play around with ahead of earnings and do a lot. The spreads are too wide. The liquidity is non-existent. It's one that I think a lot of people had hopes for when it launched after the IPO. That this would be a good, especially given its pedigree, that it would be a friendly for option trading name, and it just hasn't turned out to be the case. A grand total of the money volume today of 69 contracts. 52 puts, 17 calls. So there you go. So yeah, if you were writing in Cibo and you actually could get out without paying too much of a spread, then you did all right. Same thing with GM. GM didn't really numbers were decent, but the name overall didn't move too much. I talked last week a little bit about GM, Uncle Mike, but you haven't been playing too much in GM, right?
Nope, have not touched it. Just the Ford.
You're a Ford man only. Ford or nothing for you.
Yes.
And of course, there have been other things going on in the market aside from the broad indices and aside from earnings. I'm sure a lot of our panelists and a lot of our listeners have been focused today and yesterday on good old SLV and on the silver futures in general. So, Uncle Mike, give us your rundown on silver for the past couple of sessions and what you've been up to out in SLV.
Well, what we've been doing on it, we're long the 40 puts on SLV right now. We got out of the short calls. Probably just might as well have just stayed in them in hindsight, but we got out of the short calls around the 40 level, and we hung on to the 40 puts. And the plans generally, if you get, it's funny, there's a lot of clients that I have that like one of the selling points of becoming a client was that, okay, when you have a collar on, the market goes down, there's a lot of things you could do. You can take profits on the puts, you could buy more shares, you could do this, that, or the other on it. And so it's funny, the ones that I've had in SLV and GLD, we haven't had that yet. So it's weird, some of the phone calls I'm taking. Yeah, it actually can go down at times. But anyway, with that,
this is America. Stocks go up.
No, well, we're talking silver, so silver.
This is America. Silver goes up.
There you go.
Haven't you seen the infomercials with the crazy movement in the dollar and America's debt? You have to buy gold. That's what the commercials are saying.
That of
gold
course,
can't lose.
Listeners, that of course is the scintillating tones of none other than the Seabass himself, good old greasy meatball, Mark Sebastian, joining us in progress. How are you doing, Mr. Sebastian?
I apologize for my delay. I was on with a client. As you know, it goes clients, then podcast, although I would prefer it go the other way around.
The people who pay the bills actually come first in your book. What kind of man are you, sir?
I know. I'm a scumbag.
And I'm sure you're talking about gold infomercials. Are you referring to the firm that just bought TradeStation for $400 million? Good old Monex. and they put out that nice little British lady to come on and say, you should buy gold. Yeah.
Oh, hello.
Apparently they made $400 million enough to buy TradeStation with those commercials.
Yeah. Boy, $400 million for TradeStation. Boy, if I was a huge options broker, I would be so excited because I'm going to get sold for so much more. I mean, think about the multiplier if you were like a really big one. I mean, if you were like, if you were somewhere some of the size of like an Options Express, you would get at least $1.5 billion, maybe $2 billion based on that multiplier, right?
One would think. I will speak for Mr. Tinav, who obviously cannot speak. He is struck dumb by your words, sir. But yeah, you'd think. So have you been playing at all in SLV or the big futures today, Mr. Seabass?
I've been looking at them all day, and the vol is screaming high, which makes me wonder how much lower this thing can go. Are we in kind of like a, because you sit there and you say, well, the vol can't go any higher, and then
and think about when you think about it, when someone's in a collar before they get interrupted when they're telling people about that. One of the things that you can do is you have the protection in place, and then you look to buy more shares of it. Sorry, just had to finish that thought.
Right. Yeah, you can shares of it. But, then I think about what happened with SKF in 2008. And, when we were like, oh, the vol can't go over 90. Oh, the vol can't go over 120. Oh, the vol can't go to over 250. And then you know what it did? It just kept going and going and going and going. And if silver does fully correct back to where it kind of logically makes sense, which is somewhere below 30, if you look at where implied vol has gone, okay, since the beginning of April, all right, at the beginning of April, it was about 35. It's now at 71, okay? If we drop another, 10 handles, okay, back to where it might make sense, while on that correction down, you're going to be looking at vol screaming through 100, probably 100. So, especially if we keep at this clip.
Given the way this thing has been moving, that doesn't sound too out of the realm of insanity.
What do you think 10-day vol is right now? All right, and that's 10-day. All right, which doesn't include some of this move. If you had to bet, and don't cheat by looking at live vol.
We just played this game with the SIBO at the money options. Now we'll play it with SLV vol. 10-day vol?
10-day vol, and that's close or open. I mean, we're not even talking high-low. Okay?
I'm going to say 76.
Yeah, it's 77%. Okay?
Really?
Wow.
Yeah.
Wow, and that was without live vol at all. I'm just saying. My live vol was closed as we speak.
All right,
I should boot it up now.
I'm going to calculate.
Well, what do I win? Do I get a slinky or something for being the close man?
You do. So now what I'm going to do is I'm going to tell you what the high-low vol is, which is what I think is kind of the tough-to-trade indicator. Most realized vol indicators give you close, open. The one I really like to look at is actually high-low, which is over a 10 or a 20-day period of time. What was the absolute peak and what was the absolute bottom? Because that's really the Bronco you're dealing with. It's one thing to come in and say, well, here's where we closed every day. It's another to be trading intraday. So, the high on silver was 48.35, all right? And we closed at the absolute low was 33.58, okay? So 48.35 minus 33.58, okay? We've moved $14.77. Okay, from a high-low range. Okay, I'm going to use our starting price, which is generous and about $45. Okay, so 10 over, and I'm going to use 365. 365. We're going to take the square root of that. We're going to multiply it times 45. That gives us $7.44. $7.44. Okay, 10, 365. Square root times 45. So that's 744, right? So what's 1477 divided by 744? I mean, that's a high-low vol of like 190%. You know how crazy that is? Think about it.
I'm much more of a trading days vol man myself, but the analysis is the same.
Yeah, I mean, trading days, right. I think, but what this gives you a perspective is not kind of, where, I think it gives you a real, if you wanted to use trading days, I'm sorry. Let me give that to you. Okay? Square root.
Now you're speaking my language, sir.
Times 45. I'm sorry. So then your vol would be 165%.
There we go.
High-low. The absolute high, absolute low volatility. All right? Using $45 for a kind of a gauge. So think about that, folks. All right? Think about that. That is crazy.
And that's one to grow on in SLV.
But
But yeah, this one, I mean, it's amazing to think,
you know what that was from? That was from Reading Rainbow.
See, you're mixing your metaphors, and you're mixing your 80s learning programs, sir.
I know, sorry, but it's high, it's crazy, high volatility.
I don't know, Uncle Mike. We might be testing those 26 to 28 handles again that we were debating just a few months ago. This is crazy. This is just a fun one to watch. Fortunes are being made and lost every day in this one, which is always an interesting one for us to watch.
You might want to advise your wife to stop buying up all that silver at those garage sales.
Yeah.
Well, we'll see. I mean, I will stand by my long-term sentiment on silver. I still think it is going to go up throughout time. Obviously, in the near term, it's been getting smoked, but
throughout time. That's way to give yourself a window there, pal.
No, I'm giving it a long. I mean, I've told people from the get-go. I've given myself a window from the get-go on silver that it is a longer-term investment, that I had longer-term sentiment on it.
I agree with you.
But I mean, with that in mind, let me ask you this though: in terms of the short term right now, wouldn't you guys think that a lot of the downfall on this has to do with the margin requirements being raised from the mark?
Oh, definitely. That definitely kicked it off the cliff.
That kicked off the cliff. And well, you got to remember though, market all the buyers now know they don't have any lemmings that are going to keep running this thing up. Okay, and now what we're in is kind of a tailspin of margin calls, if that makes sense. And so until we kind of clean out the people that were buying in at 45, with those margin calls, I think silver drops. So, where does it really catch a floor? Well, I think, believe it or not, I think if the spoos don't kind of fall off the truck at the end of the day, silver sticks at 35. Tell you the truth. We're sitting here at 33.90. My personal feeling is it doesn't really. I don't know how much lower we go, at least in the short term. Tell you the truth.
It's amazing. We've already broken through the current month weekly strikes. They go as low as 34.
I love that.
That's fantastic.
That is
listed a week ago, and we've already blown through the low of the downside.
This is where I would recreate the scene from Teenage Mutant Ninja Turtles when Michelangelo says, "I love being a turtle," except I would say, "I love being a traitor" when I see stuff like this.
I just wanted to say that as far as the margin calls are concerned, it not only has to do now with silver. Silver now has a friend, crude oil. So, it's sort of spread. You have liquidations going on in crude oil as well. So it's pretty much people's. One of my last calls of the day was somebody who just wiped his position off the table. With crude oil and with silver, and he was a good trader. He knew what he was doing, but he took a hit, and he said, I'd rather, not have any positions on and have some money left, rather than have nothing at all.
I totally understand.
So it could be a little contagious here. Yeah.
Always a happy way to end your day. I'm sure.
Yeah.
All right, and on that uplifting and upbeat note, we'll close out the trading block and roll right into the odd block.
The odd block.
The odd block.
There we go. And welcome to the odd block. Dude, you should have an audience of one in Mr. T-Knob here. He loves everything that comes out of your mouth.
I do. I'm pro T-Knob.
You should do a stand-up show and have him just sit in the front for you. You'd have agents clamoring for more and signing you up the next day. He's your Ed McMahon to your Carson. There we go. Yes, sir. That was funny, sir.
Wait till Tim hears about my contest that I'm having at the end of the show today.
Ooh.
So he's gonna love it.
Uh-oh.
Yeah.
All right, and welcome to the Odd Block. This is where we discuss and parse and analyze the interesting and or the unusual options activity. And we're going to light it up today with Eastman Kodak EK. This is the name that closed today at $2.85, up about 4 cents. And this is the name it does lately has been doing about 14,000 ADV, but that's high. That includes some serious activity we saw the last few days. But today they did over 72,000 contracts today. And this is the name you haven't been following Kodak for a while. They just had earnings, and the stock's been on a bit of a downward slide for the last few months. It was trading $5 a few months ago, gapped down to the downside, and it's just been trading or hovering around the 3 strike ever since. Last earnings came out, and they were not exactly spectacular, so it's dropped below the 3 handle yet again. And now we're seeing, just this morning, a lot of interest in the old June 2.5 strike on the put side. We saw 35,000 of those go up, the bulk of them hitting bids. So this is an strike that had an open interest of 1,300 contracts previous to this. So this is an explosion of opening paper here in good old Kodak. We also saw some activity today in the front month with the May 3 puts going up about 14,000 times. So overall, a lot of action going up in Kodak today. Maybe, who knows, maybe Kodak, if it stays at this price level, will become the new darling for the HFT guys once Citi does its reverse split.
Weren't they merging with Skype or something, or
Yeah, Kodak, the old film to VoIP merger. That makes about as much sense as the Compaq HP one. Or
I heard Facebook is taking a look at them. Yeah.
There we go. There we go. Let's buy a few thousand, May 3s, and we'll start floating that rumor around out there. But yeah, anyway, looks like there's also a ton of short interest right now on good old EK. It's actually on the top list of the top 100 short interest names floating around out there. It's number 27. So a lot of shorts have been riding this down from the 3.5 range down to below the 2 strike. So this could possibly be someone who is putting on that short put position on the 2.5 strike to pick up some stock if it drops down there and close out his short stock position, or in terms of just putting on a bullish spec. Obviously, this has limited downside now. The stock's in the 2.5 range, but we are seeing more and more paper flocking to Kodak. So I know these people are, and these HFT guys are looking for a new name after starting tomorrow. So I'm not saying this paper is high freak stuff, but it is interesting to think of Eastman maybe taking over that name. Kodak, anyway. What, Sebastian? You play it all. This is a little name, but an intriguing one nonetheless.
I'm just looking to see whether I was trying to debate whether this is not high frequency paper. This is somebody.
This isn't. No, this is legitimate paper. I'm just saying maybe this name might be the new one on their radar though.
No. The ones I'm hearing for the high frequency paper are Sirius Satellite Radio and BAC, Bank of America. Those are the ones I'm hearing most for high frequency traders. So those are the ones I would keep an eye on. So. The nice thing is if you know what all the high-frequency option guys are trading, you can basically sell premium and know that stock is not going to move. Because the high-frequency guys just absolutely kill price movement volatility. They do.
Look at Citi. It's been at 4.5 for what, a week, 2 weeks?
Mm-hmm.
Hasn't moved.
Well, I'm thinking actually looking at Citi, I know we're going off on a tangent here, but looking at Citi, that how do you not want to buy like the July 4.5 straddle for 40 cents. That seems like a nice.
I'd have to imagine Vol's going to creep up to this reverse split takes effect. We've already got a position on the June 4.5 straddle, and if that doesn't work, we can always roll it out to July. But we have the same sentiment, which is why we've been. In fact, we just picked up some more of the June 4.5 puts today, but to complete our ensemble on the June strike. But yeah, this is definitely one I would imagine is going to, once it breaks free from the iron grip of the HFT guys, it will have some price movement again. Speaking of interesting names, we talked a lot earlier about SLV and silver, and it's impossible to parse SLV for any sort of volume trends. They did pretty much 2 million contracts today. They were pushing it a little while ago. Let me see what the overall total for the day was on SLV. It was, 2.2 million contracts today. So there's no way to parse that in terms of finding trends. It was over 10 times or about 10 times the ADV. And the call to put was surprisingly even, 1-to-1 essentially for the most part. So no overall significant trends in that. But we did see some interesting related trading going up in XME, which is the S&P Metals and Mining ETF. We saw a bearish put fly going on out in this ETF. It went on really early in the opening, near the opening bell. So this is someone obviously positioning against some of the movements in silver and just the commodity metals in general. We saw this guy picking up 1,500 of the May 69 puts, actually XME. Before we go that far, XME closed at $70.41, down $1.56, and this is a name that does about 18,000 contracts a day. That did 23,000 today, so it hasn't seen the explosion that SLV has in terms of volume, but it's seeing some activity. So yeah, we saw a put fly player coming in, picking up 1,500 of the May 69 puts for 89 cents, selling 3,000 of the May 66 puts for 34 cents, and then picking up 1,500 of the May 63 puts for 19 cents. That works out to 40 cents a contract, and these are all downside out of the money puts. So this is a bit of a bearish fly overall, and looks like this guy needs the stock to drop about 4% away from its current 70.5 handle to down in the 68 region to really start breaking even on this trade. And interesting nonetheless, like I said, this is someone who's positioning for more bearish downside in these metals and names. Obviously, this isn't anywhere near the size of what we saw in SLV, but it was an intriguing trade nonetheless. And we're going to finish this up really quick in today's somewhat abbreviated odd block with some activity we saw going up in NVIDIA yesterday. In good old NVIDIA, this is NVDA, ticker symbol, closed $18.66. I'm sorry, $18.66, up a penny. This is the name that does about 62,000 contracts a day lately, and that today they did 22,000. The bulk of that ADV has been increased by some interesting activity lately, and we saw an explosion actually late into yesterday of some size put activity going up in good old NVIDIA. We saw about 11,000 of the May. These are front month weekly May 18 puts. More than 11,000 went up yesterday, lifting offers for the bulk of them. This was a strike that had about 1,200 open interest before that. So this one was this is all opening paper for the most part, and the total volume on the day was about 30,000 contracts, with the puts leading the calls by about 3-to-1, and this is the name that's seen about a 5% drop over the past few days on the news that Apple is switching over its Mac to some different processors and away from NVIDIA. Of course, these are really, really near-term plays, which is why we thought this was interesting. This was front month weekly. These are expiring now in one more session. So these guys are really, let me see what pull up the time and sales to see what the exact price was for these. Hold on one second. Because this is yesterday paper. Yeah, these things were trading for around a dime. And where'd they go out today? So yeah, these are already nickel or 3-cent bid at a nickel. So yeah, a lot of really, really opening sharp, immediate near-term downside paper for NVIDIA, thinking that even though the stock's already sold off about 5%, they are either hedging their longs for a near-term move, or they're picking up with some cheap specs that this thing's going to pop to the downside again before Friday expiration tomorrow. I know we've talked about NVIDIA a lot in the past. Have any of you guys been playing this one lately?
I have not.
No. You know why? This thing just keeps. It's one of those, like, gets really hot on takeover rumors, and it's kind of interesting, and then the next thing you know, it's boring as heck. You know, it's like it's like when Saved by the Bell switched from Kelly Kapowski to that butch chick in the leather jacket. And you're like, what the heck happened? And then seemingly all of a sudden Kelly Kapowski was right back. So that's what NVIDIA is like. NVIDIA is like Saved by the Bell.
A bad 80s children's show, that's what you're saying.
Well, teenagers, so tweeners.
Tween. It was the first real tween show is what it was.
It really was. It really was the first tween show.
They were ahead of their time. Before the explosion of Mary-Kate and Ashley and all the other nonsense they have today. But yeah, NVIDIA has been an interesting one. They had a lot of explosion of activity earlier this year, a lot of movement, and then they have since kind of been been somewhat range bound in the old, 19 to 17.5 range for the bulk of the past few months. So if you were a premium seller out there, I guess you did all right for the past few months. And this is the name. They have earnings coming out on the 12th, like just about half the names on the planet. The 12th is an active day. But yeah, this is an interesting one. And just the reason we wanted to highlight it just because it was such ridiculously near-term volume and so much of it that it was worth, at the very least, mentioning. These guys are not looking too good right now, so they'll need a bit of more downside pop for this to pay off before tomorrow. And that's going to do it for the old odd block. And with that, we'll roll right into Mr. Tim Navabi's Express Block.
The Express Block, brought to you by Options Express. Options Express lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, Options Express is the online broker for all traders. Best of all, Options Express allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. Options Express is a member of FINRA, SIPC, and NFA.
The Navabi Block.
And welcome to the Navabi Block.
Navabi. Whoa.
Oh, yes.
Navabi.
The dulcet tones.
Whoa.
This is why we need a live audience so they can capture all of this as well.
Yeah, hey. I'm working on setting that up right now. It's going to be great.
Cool. But yeah, so this is welcome indeed to the old Navabi Express Block. This is where Tim Navabi takes the reins and takes us down the rabbit hole that is Options Express. Mr. Navabi, what do you have on the docket for us today, sir?
Thank you very much, Mark. Mark, if you don't mind, I would first, I want to get to that viewer question. Do you want me, I did read it. I think it's a great question.
Jumping ahead, sir, but it is indeed very relevant to what we're doing. So instead of doing this listener question in the listener question section, we will do it here in the old.
I mean, if you want, I can wait. It's no problem. I thought. You want I can go through some quotes and things like that and get to the question?
We're going along pretty good here, so why don't we can just do it now? So tell you what, I will read this question from our forum for our listeners. It is from our friend Monkey Boy in the old forums, and he asked a question about trading. The title of his post is Trading Big Silver Futures versus SLV Options, and he writes, "Hey Option Block hosts, love the show. I'm excited to see the network grow. Looking forward to seeing what new derivatives shows Mark cooks up next." Well, thank you, sir, and we have some interesting stuff on the docket, so stay tuned. But he's also asked, "I've been dabbling in silver futures for a while, but I'm not as excited about the liquidity in the silver futures options. SLV, however, is doing over 1 million contracts a day lately. Can I write SLV covered calls against my long silver's futures positions in my OX account, for example? Does OX offer cross-margining of futures/ETF options positions like this? Could I also buy SLV puts to hedge my futures, and would they be considered hedged? Thanks, and keep up the good work." So, Tim, this is obviously a good one for you and for the Express Block. I know there will be some multiplier issues to work out there, but I'd imagine I'll let you take the rest of it, and we'll go from there.
Okay. I just want to say that, that sounds like a great listener. It sounds like somebody who really knows the markets, knows what to look for in trading. So it's very exciting, I think, to have a listener like that. It's great. It's a great question. It's a very, very good question.
Well, we have at least 2 good listeners out there now. We know that, so we're good to go. Sponsors should be very excited.
And there's 2 points I want to make here, and I don't know where to start. But let me first start with the easy one, and the answer is no. And the answer is no in that is something you would primarily find possibly maybe with a full-service brokerage or a institutional brokerage. Now, if you have a portfolio margined account, there may be some benefits there, but they're not going to be directly related as far as a cross margin is concerned.
And just for our listeners, portfolio margin has to be over 100K, right? That's the starting point for that?
Yes, that's correct. Okay. Yeah. So, I could probably see some sort of benefit, of a margin reduction in a, portfolio margin account. But, anything other than that, the answer is no. But it is a very, very good question, and it's sort of a deep situation here that he's talking about. But the second point I wanted to make was that, exactly what he mentioned, what his problems were with the, options on silver futures. I remember a long, long time ago when I used to have to pick up the phone and call someone in a trading pit to get a quote for silver options, and it just wasn't the easiest thing to do for several different reasons. Over time now, we have these instruments, which can track the SLV, or the GLD or the USO, and there are some disadvantages, slight disadvantages to those as they use futures, but primarily, that's where the crowd is. I think if you are looking for liquidity, that's where you should be. I knew somebody who, was a good friend of mine, and he wanted to trade some deep out of the money options in the metals. And I had told him, what to be careful of. And, a lot of that was because of those liquidity issues. That, if you're looking to take advantage of the opportunity right away, and, get a fill, work in order, it may not be in the silver futures options. I think they're very, very good instruments, extremely good. I mean, they're very unique, specialized. They're a niche. They're really only for a certain, I would say, group or individual or institution that would need something that leveraged. But I think for somebody who is looking to say, hey, I've got an opinion here on silver, gold, oil, and I'm looking to buy some time, sell some time. The SLV options is probably what you want to be sticking with. If you have really deep pockets and you're willing to work in order for a while, and you think you may need to get out at 2 a.m. in the morning at some time, the silver options, futures options might be where you want to be too. So,
is this a scenario you come across with any frequency? Do you have people calling up and asking, "Hey, can I do this?" Or is this the first time?
Can I cross margin?
Yeah.
It's rare. It's rare that they will ask that, but I will get asked that. I would say probably once every 6 months.
It would make my life easier if I could do that, because so you would not cross margin like an SPX versus the ES futures, or
no.
SPX versus ES options. So if I was short 2 ES, what if even during like a quarterly? So if I was short 2 June ES 1345 calls and long 1 SPX June 1345 call, you won't cross margin that, even though it's a zero position.
You're right, it is, but that's not the fault of Options Express, because even though at Options Express you have everything trading in the same account, it's still 2 separate accounts kind of behind the screen, and you have 2 exchanges, 2 regulators,
and one margin manager.
And one margin manager.
I mean,
it's...
Yeah,
sorry to interrupt you.
I understand why they wouldn't do that, but the point is that in actuality, OX OX can margin that. I don't know if you know that, but the customer is not getting cross margining. You know who is? Options Express. So they have this huge, I don't know if you guys know this, but broker firms, they have this big slurry of they literally take their big groupings of who's short and who's long, and they actually margin those against each other and actually make a ton of their money on the stock float and on the margin float. I don't know if you knew that, but one of the most profitable things that organizations have is the float between people they're loaning stock to and people who stock they own, where they literally just charge the interest.
Oh, yeah. One thing, I kind of want to say that, I'm glad Mike.
That's a problem. I would do the same thing. So I'm
one thing I'm glad Mike chimed in, and I'm glad you brought that up, Mark. But we are offering some, lower. There's a number of other benefits that we can provide, and with the volume of accounts and the volume of calls coming in, I have seen the situation that you're talking about, with the full service brokerage. They had no problem doing it. You know why? Because there's one broker there who says, okay, I'll take it. If there are other problems, then, I'm the guy.
So what you're saying is that if I want to cross margin and I say Tim Navabi said it was okay, then it's perfectly fine.
Not at all. Not at all.
Tim, you have that kind of pull. You know that. Don't be modest, sir.
But he's kind of a big deal.
I'm somebody in Europe. And really, that's the main reason. I mean, if we had to go, cross margin these accounts, there's really a lot involved there. And I really wanted to be clear that a lot of it is really because of the volume of trading going on. There's not an individual relationship where someone can say, okay, let's work this out. Here's the kind of margin I'm going to charge you. We're not a full service brokerage account, so it's just not. I think it's a great thing to cross margin. I've seen it, like I said, at full service brokers, and there's a big benefit to it. But then believe it or not, there's risk there too. There is risk. So, but for here and sort of the size and kind of what we do and what we provide, it's not going to work.
Maybe that will be something that the long arm of Schwab can add to this. But yeah, Uncle Mike was right. There is a regulatory component to this as well. It's not just a purely broker's decision. And margin is one area where the U.S., for all our advances and all the ways that we lead the global financial markets, our margining systems we've constantly lagged behind the rest of the world. The fact that we don't have instant cross-margining of futures and like index options and things like that, which have been commonplace around the world for years, and we still have to fight for that here, is absurd.
Well, and current Reg T margining, I think, is more dangerous than the way portfolio margin is set up. It actually encourages people to make poor decisions and bad trades, in my opinion. So.
Well, yeah, because your capital is being completely inefficiently utilized.
Yeah, it's ridiculous. That's the problem with having regulators that don't understand the industry.
And also having split regulators between the SEC and CFTC, and between the two of them having different purviews, that margining of the two different accounts that falls under the purview of both regulators tends to fall by the wayside. So that's something we've been fighting for a long time here, and people were hoping maybe Dodd-Frank would come to grips with some of that, but it's not looking like that's the case anytime soon.
I think they added more regulators on that one there. We have no shortage of regulators whatsoever. And lots of shortage of knowledge, like Mark said.
That's exactly right. We have an abundance of regulators, and
we don't know too much.
A lack of knowledge. Yeah, if you took every third regulator, okay, and if you took every third regulator and took the salaries of the three of them and gave it to that regulator, you could actually afford to pay for people that know what the heck they're doing.
Yeah.
Does that,
Yeah, definitely.
And solving the world's problems one at a time.
There we go. I'm known for.
I'm not so sure it's a personal thing, though, because, I do know some regulators, and they are extremely intelligent people. They have a degree from University of Michigan or a degree from University of Virginia law schools, I'm saying, and they are smart guys. But when they have to read the Dodd-Frank, and they get confused because there's just so much there, and it's almost as if they're just too good for what they're doing. It just needs to be simplified. Really, I don't think it's the intelligence necessarily of the regulators, but it's just that everyone wants to put another rule in the book because they can take someone out for a steak dinner and get it, get it written, and that's what we're left with, and no one's really benefiting, or the people that it's supposed to benefit it's not happening.
So, listeners, if you have a question or complaint about your margin, send them to good old T-Nav over at Options Express, and he will answer all of them directly and with a smile, and a courteous smile at that. He's the go-to man for margin. All right. And with that, I'm glad you brought that up, Tim, because that is an interesting topic, and we were going to do a listener question, but that question kind of deserves its own discussion and analysis.
Thanks. Right. I hope it didn't go too long.
No, that's fine.
No, you were great.
And that's going to close out the old Express block. And with that, we're going to skip over the old strategy block and the rest of the listener questions for this week, because we did talk about that one for a while. We'll have more listener questions for next week, and we're going to roll right into Around the Block.
Around the Block.
Listeners, you really should be here for the live recordings, because all sorts of fun stuff happens in the intermissions. But welcome to the Around the Block segment. This is where we discuss what's coming up on the horizon for the next few sessions. And, we talked a little bit at the top of the show about the unemployment numbers and how that took the market to the downside a little bit, where we have some more... the continuing saga that is employment and the unemployment rate. With tomorrow, we have the good old unemployment numbers coming out and non-farm payrolls as well. And so we have a kind of a double whammy of employment yesterday, or today and tomorrow. And so all eyes will be, obviously, after today's surprise to the upside in terms of more jobless claims than expected, that all eyes will be on that unemployment number tomorrow. So I'd imagine paper flow will be light until we get that number out. And Sebastian, I know you like looking at those non-farms. So what's your call for tomorrow?
It's gonna miss, but we're gonna rally.
Ooh.
What do you think about that?
Bold statement.
We will rally, and yet silver will plunge to 26.
No, I mean, I personally, I wish. Personally, I think that we're at a spot where, silver's probably a little bit done for now. I think today was not capitulation by any means, but, that's all we can muster up in all this junk coming out. I think this is kind of everybody's excuse to hop in. So, I do think that this is that's my call. Is I think we miss barely and rally.
People hop into the market or hop into silver?
Hop into the market.
Okay.
The market. Silver may not rally, but I don't think it's gonna tank.
Well, Uncle Mike's gobbling it up with two fists over there, so it's got to rally pretty soon. The silver.
Not yet. Like I was saying earlier, we're still long the 40 puts right now, and I'm on a 10% down day. I'm not going to be selling puts for profits and buying more of it. But if we get an update in silver, I do plan to take action in one way, shape, or form, whether it's roll down the puts and get into a 1x2 repair strategy, or perhaps buy more shares depending on the size of the account. But I'm not going to take any bullish action of any kind on a day like today. But if we start coming back, I do plan to. I'm going to stay true to the long-term sentiment on it.
Mark Sebastian said something earlier which was funny, and I also want to ask if he's ever said it again. But it reminds me of something that I heard earlier today, and that's when someone says it's never going to go down there.
Mm-hmm.
That's how my morning started, with some of those phone calls, and that's usually a sign. And then I was talking to them later in the afternoon as they were getting out. So I don't know. I'm just. Mark, let me ask you. Have you ever said that again? Like it'll never.
I
since
hear
that time, like the SKF. Yeah.
I do not. I have
Right.
not, but I've seen lots of people. I hear that all the time.
Right.
That's the classic thing. One thing I would note is that today's sell-off could be considered. You're going to see tomorrow, okay, a bunch of write-ups in the paper how today's sell-off is great for the American economy because it's going to drive truck sales, and it's going to drop gas back below $4, and it may be the sell-off that we needed to save any kind of rally. I mean, there's going to be so much spin here. So things like that, I think this commodity sell-off was really important, okay? Because what was happening over the last couple of weeks was an absolute economy killer. I'm sorry, it was. If we saw $5 gas, you would have literally been able to hear job growth and the economy coming to a halt. It would have gone right into gas tanks, and then you'd have seen Leonardo DiCaprio driving around in his Prius all over again, talking.
That gets into the argument that I have with the oil bulls all the time. I've been having it for the last couple of years, and my argument is that we saw in 08 into 09 what effectively was a ceiling, at least a near-term ceiling for oil, and you get up to that 150 range and beyond that, the crushing effect on the economy is so overwhelming, and the subsequent moves to the upside in gas are so crushing, and of course everything else, all the commodities that move up as oil moves up, is so crushing on the economy that there's just a natural ceiling to how far oil can go before the economy just falls backwards and the oil price drops again. And that's been my argument for a while, and a lot of oil bulls have been debating me vigorously.
No, I think that the oil industry is the only person that is going to kill oil as an energy source is the oil industry. If they allow oil to get out of hand, they have to know that. So,
I'm waiting for the letter from Obama about investigating silver speculators. They'll be the next one. If we were all putting silver in our gas tanks, I guarantee you that letter would already have gone out a long time ago.
I know, it's hilarious. But I do think that maybe the dollar was overdone. The other thing you've got to remember that probably helped was the dollar rally today, because the EU came out and said, well, maybe we're not going to raise rates as fast as we thought we were. And that was an important statement, and that caused the dollar a nice little bit of dollar rally today. And so that's another thing that maybe we think about.
I was going to say that what did you think, Mark, today of initial claims? I mean, today we missed pretty bad, and it was pretty ugly. And I think personally, that's kind of what I'm looking for tomorrow.
The Labor Department had some interesting excuses for it, because when you see something that big, I think it's an outlier more than it's a steady trend. When you see that going up 5,000, like I'm more concerned about misses of 5 to 10,000 than I am 35,000, because I feel at this point. Because a lot of times I feel like those big $35,000 misses are there's some sort of weird anomaly that causes something like this. And my understanding is that the anomaly that we're seeing this week has to do with the shutdown in the parts delay from Japan among Toyota and Honda. And so it's just how the part. It's just basically different parts running through the system. My understanding is it had something to do with today had a lot to do with missing the Japan parts supply chain, and the fact that so part building was shut down for a week and a half. Then they had so much backlog, and so we're running through that chain in the system, and that was kind of a big driver of unemployment. That's what I heard. So. That was one of the excuses I was hearing. So,
and of course, Uncle Mike.
Who knows?
Oh, and Uncle Mike and Mr. T-Nav, I imagine both of you tomorrow will be spending your time when you're not waiting for the old non-farm number, just glued to SLV and the big silver future, I'd imagine.
That's pretty much been my whole life the last 2 weeks.
I've been meaning to ask you, Uncle Mike, how many bathroom breaks have you been able to take? I know that's your barometer of a busy day.
Yes.
Yeah, no kidding.
I'm guessing
not as many as I'd like, I guess.
I'm guessing there's a bag near Uncle Mike's desk for the past few days, or a little bottle, perhaps. All right, and it's
definitely been quite the obsession.
All right, and that's going to do it for the Around the Block session, as well as this episode of the Option Block. I want to thank.
No!
Let's just do it all again. Let's go another 2 hours.
That was too much fun.
Our listeners would love it.
They would.
But we can do that when we do the live session. How about that?
That is going to be you guys better get prepared for that live session. That is not only going to be a marathon of discussion. There's going to be so much hem-hawing and ball busting. And
I heard the mini medals are going to open for us, too. It's going to be an event.
Well, I think that we need. I think we have to get the entire OX crew there, not just. I don't think Grigas or Navabi alone. I think the whole team.
All three, huh?
Not a bad idea. We can get them in the crowd, kind of cheering us on, give them a reason to go out.
I want everybody there, and then you can bring all the OX crew with you, and then we'll get all the general public and. They can see how badass Mark Longo's goatee is. It's going to be awesome.
It is pretty intimidating up close, yes.
And then all the ladies will be there for Tim Navabi, of course, because the guy's a freaking lady killer.
But listeners, yes, we are planning a live show. You have been asking for it, so we are planning it. We're just debating the location and the venue and the date.
Ooh, I got a great idea. All right. We're going to dress you and Mike Tusaw up as the red and blue Rock'em Sock'em Robots, and then have the two of you fight each other. What do you think?
That'll be the ad. That'll be the premium portion of the event. Get your tickets.
What do you go as then? Are you the mini Gene
I go as that.
then,
I go as that little mini referee that's on the cards. So.
I hope you wear your 80s members only jacket. I mean, if you're going to talk the talk, you got to walk the walk. So
I think that's a brilliant idea, Mr. Navabi.
No, I just have all sorts of images in my head of what this event will be like. And listeners, you'll have to be there to see for yourself. But yes, we are still debating the venue and debating the area. We'll try to make it obviously free for you guys so you can come in, and we don't want you to have to pay to listen to good old T-Nav. But yeah, so we'll have a fun location, a fun event. We can hopefully pack on a lot of listener questions live from the audience, maybe have a few interesting guests up on the panel and do a lot of fun stuff and make it a generally fun experience. So if you're going to be in Chicago, or if you're in Chicago in the next few months, we'll be putting that together and let you know more shortly. But aside from that, Uncle Mike, what is going on over in Know Your Options Inc. land?
Well, a couple things, actually. The first one, I am actually doing an event that it's not really a Know Your Options event, but I will be there. We are doing Physicians Express in St. Charles, Illinois, is having a big blood drive on Saturday the 14th. It's just an overall health and safety fair. They're going to be having Jumpa for the kids. They're going to be having car seat inspections, just overall health and safety. It's my wife's office where she works at. She's kind of sponsoring it. I will be there helping things out. So if you do want to give blood, it's a very worthy cause. Stop on by. We'd love to have you. And also, if you'd like to meet me and kick me in the knees or shake my hand, whatever the case may be, stop on out. Love to meet all you guys if you are in the St. Charles, Illinois area.
Give them the old silver kick to the kneecaps.
There we go.
I love it. And let me tell you, you haven't lived till you've met Mike Tusaw. The only thing the only thing bigger than his body is his heart. That's what I always say.
I'd say you haven't lived until you've kicked Mike Tusaw. It's such a fun experience.
Oh, see, Rock'em Sock'em Robot time.
We're getting it done. Speaking of 80s references, I am a diehard pro wrestling fan from the 80s, and we're going to get this done.
Oh, there we go.
I'm bringing folding chairs. Forget the Rock'em Sock'ems.
I used to like Ultimate Warrior.
Paul Orndorff, Mr. Wonderful stuff.
I call Ultimate Warrior then if we're talking 80s wrestlers.
Nice.
He's nothing compared to Paul Orndorff. And I'm going to have Bobby Heenan as my manager, too. We're getting it done.
I like it. And Mr. Seabass, manager of the Mini Metals, what is going on aside from the Mini Metals Roadshow over
I got to tell you about this contest. It's the Option Pit Ridiculous Claim Contest. Okay? So
is this a contest for the analysts?
No. It's even better. So, I'm doing a presentation on Tuesday for the Option Club on realistic expectations. And so in preparation for that, I want everybody to send me, we're having a competition, Send me the most ridiculous email you get from a newsletter, an education firm, somebody telling you about a penny stock, gold, silver, some of these just absolutely ludicrous emails, all right? Send it to me, all right? mark@optionpit.com, all right? The best email sent to me is going to win a really great prize. So it's going to be a lot of fun. And that's my little contest I'm doing ahead of next week. So make sure you check that out. Don't forget I'm speaking at the SIBO on Saturday for an all-day event. So
I might come by just to have you buy me a beer.
No, you should. No, I'm not buying beers. If you show up, I'll buy you what's it called for the Derby?
Hat? Mint julep.
Julep, yes.
Mint julep, yeah.
I thought it was steaks and the beverage of our choice was the premise.
Yeah,
No.
that's what I heard.
Nope, it's a mint julep.
Or perhaps a nice Brazilian churrascaria, all-you-can-eat steak affair.
Nice. No, but maybe Old Country Buffet.
OCB.
OCB, done. I'm there now, and I'm bringing the whole family. We're coming.
Nice.
All right. And, of course, listeners, if you'd like to hear more of this fantastic banter, as well as hear more about the unusual activity we discussed on the show or any of the breaking options or market or industry news that we have, surf on over to theoptionsinsider.com. If you'd like to leave a question like our friend Monkey Boy did here for this show, you can post it in the forum there. Just scroll on down to the Option Block forum. You can also send us an email at questions@theoptionsinsider.com, or, of course, leave us a voicemail at 312-544-9356. And so far, the voicemails have been scant. I think a lot of people have been afraid to have their voices played on the air. The emails are plentiful. The forum posts are plentiful. People are even hitting us up via Twitter, twitter.com/options, or you can hit us up at twitter.com/optionblock. But, of course, the voicemail, I think, is a little intimidating. So if you're a brave, hardy soul and you want to have your question played on the air for all of your friends and, indeed, your loved ones to hear, then drop us a line, 312-544-9356. We want to hear your voice. And, of course, Mark Sebastian wants to make fun of you. So drop us an email, drop us a voicemail there today. And that's going to do it.
So true.
That's going to do it for this episode of The Option Block. I want to thank all of our listeners for downloading and subscribing and listening to this show and making it such a success. We are closing in on Oprah every day. And we'll see you next time right here on The Option Block.
Become a part of The Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.